Hello friends, welcome to A to Z Learning channel. Today, let me start our video with a question to you first. Are you looking to invest in gold? If the answer is yes, then this is the most important video for you. In this video, I'll share with you the most efficient way of investing in gold that's available to you. I'll take you through all the key features of this most efficient option and take your questions on this. So without any further to do, I'll start my video. But just before I start my video, let me kind of reiterate what am I expecting from you. I expect only two things from you. First, if you're looking to invest in gold, then please stay with us until the end of this video so that you don't miss out anything important. So please stay with us. And while watching this video, or after you've finished watching, if you have any suggestions or comments on this video or any question that remain unanswered in your mind, then please use the comments to give us those questions, to ask those questions so that we come back to you and clarify any doubt that remain in your mind after this video. Okay, let's start. So today, as I said, I'll share with you the scheme which, in my view, the best way to invest in gold. It is called Sovereign Gold Bond Scheme. It, in my opinion, is the smartest way to invest in gold. So in today's video, we'll share with you the key features of Sovereign Gold Bond Scheme and we'll share a detailed Q&A session with you. So let's start with the reminder on the options to invest in gold first. Most people think when they think about investing in gold, they think about buying physical gold jewelry. And that is usually the most preferred option of most people in India. But let me tell you very, very upfront in simple word that that is the most inefficient way to invest in gold. I repeat, most inefficient way to invest in gold. If you're looking to invest in gold, physical gold is not the efficient option for you. And why is that? Because it involves making charges, which are dead costs. You never recover that. There are usually issues with purity also. You are expected to sell back that gold jewelry only to the jewelers from where you have bought, which raises issues in terms of your ability to sell it elsewhere. There is a high storage cost involved when you kind of keep the physical gold in the house. You're always worried about it being stolen. If you keep it in a locker with a bank or independent locker, you pay a high cost of storing that gold. So both from a making charges perspective, peace of mind perspective, storage cost perspective, purity issue perspective, it is the most inefficient way of investing in gold. Yeah, I keep repeating, emphasizing on the word investing because if your purpose is to use or gift to other people, then physical gold is a good option. But if your purpose is to invest in gold, physical gold is not a smart option. The second option is the gold exchange traded fund, which is one of the smart options of investing in gold. It has got multiple options. It's a highly liquid way of investing. Taxation is in line with what you see in the physical gold. It doesn't have the making charges because you don't buy any jewelry. You buy in demat form the ETFs, units of ETF. But it does have a fund management charge, which is roughly about 0.5% to 1% every year that you hold it for. And that's the reason this is also not a most efficient option. It is a better option than the physical gold, but it is still not the best option. What is the best option? That's where the third point comes, sovereign gold bond. It has absolutely no making charges, no storage charges. In fact, it pays interest to you. So instead of having a cost with this, you have an income with this. There is a state guarantee. Government of India guarantees So your redemption value is completely guaranteed. So it's a safe option and it offers the best return too. If you look at last 1 year's return, gold ETFs have given the top five funds of gold ETF have given about 29% return, as you can see on this table on the right. But SGBs, sovereign gold bonds, have given 34 to 35%. Amazing return. So this was just a reminder on various options and a quick comparison. But if you want a detail, you have got a link on your screen. If you press that I button, you can get to a more detailed video that we have where we are comparing all the options and helping you choose the smart option. So you can watch that video. But today, as I said, we are going to be focusing only on the best option, which is sovereign gold bond. So let's start with the key features of sovereign gold bond. I'm hoping so far it's making sense and you're able to follow it. So let's pick up the key features. First key feature, which is very, very unique, is that this is the only option where you get an interest income. Annually, you get 2.5% fixed rate of interest during the period for which you hold it. Interest is 2.5% for the whole year, but it is paid in two installments. So every 6 months you get the interest, but overall for the whole year you get 2.5%. And whatever is your final interest when the bond matures, then that final interest comes along with your investment principal amount as well. Second thing, this scheme allows investors to track and have exposure to 24 karat gold. 24 karat gold, whereas all the jewelry that you kind of buy, you purchase is in 22 karat gold. So it's more pure and a higher price investment through sovereign gold bond. Gold prices, 24 karat gold prices are taken from the published rates from IBJA, which is Indian Bullion and Jewelers Association. They publish their rates on a daily basis, and those are the rates that are taken for purchasing the gold bond as well as redeeming these gold bonds. Bond, as I said, carries a sovereign guarantee. So on the amount that you invest as well as the interest that you earn on this, Government of India guarantee is there. So you are kind of completely safe in terms of your investment. You have the option of purchasing gold with as low as 1 gram of units and maximum of 4 kilogram in any given year. So it gives you a broad flexibility to invest small amounts if that's what you're choosing, or a big amount if that's what you need to choose. If you're a trust, you were looking to invest through trust, then you have the option to go up to 20 kilograms in any given year. It's available in demat form as well as paper form. Demat form is more efficient because it gives you additional discount also. So if price is 5,000 rupees as published by IBGA, then you get demat form gold bond at 4,950. So you get an additional 50 rupees discount. Tenure for these bond is 8 years, but you have the option of redeeming with the Government of India after 5 years. Taxation, if you hold it till maturity, then there is absolutely no tax on this. And this is the only option of investing in gold where if you hold it till maturity, you will have absolutely no tax liability. Whereas physical gold or ETFs or anything else that you purchase, you are still subject to capital gain taxes. So I hope this simple explanation of key features has been followed by you, understood by you. If you have any question, give us your comments. Now let's move to the second section, which is the Q&A section. Who issues these bonds? These are the standard question that I've come up with, but if you feel that you have any other question which is not getting covered here, by comments, you can ask us those questions. So coming back to the Q&A, who issues these bonds? These bonds are issued by Government of India. Are these safe to own? Absolutely safe, because there is a clear government guarantee on this. Whereas physical gold, you kind of it's based on the trust with the jewelers. Um, ETF, mutual fund companies, which are also safe, but sometimes mutual fund companies can also go belly up and you may get stuck with that money. But sovereign gold bond, there is a government guarantee. So it's safest option to invest in gold. How long do I need to hold these bonds for? And are there options for me to sell these bonds sooner? How long? Its bonds come with 8 year of maturity period, so you need to hold it for 8 years. But there is an option after 5 year of holding this bond, you can sell it back to Government of India, and you get your money back based on the price at that time. If you want to sell it even sooner than 5 years, you can sell it at the stock exchange. It is tradable at National Stock Exchange. So you can purchase as well as sell your bonds in the secondary market too. Is there any discount on these bonds? When you purchase these bonds, when the issue comes from Government India and you purchase in demat form online, then you get 50 rupees of discount on the price. Can these bonds be bought in the secondary market or stock exchange? Yes, these bonds can be bought in the secondary market and stock exchange. In fact, you get a discounted price when you purchase it from secondary market. But you need to kind of keep in mind that when you're purchasing, you need to keep in mind that who's your depository and who's the depository of the seller. As you know, in India, we have got two depository. One is NSDL and the other one is the CDSL, sorry. So if the seller is CDSL and you as a buyer is NSDL, then there are going to be some issues in terms of the bond that you are buying from the secondary market in terms of them being shown in your demat account. So you need to just make sure that you are clear about that with your broker before you place that order. Having said that, even if you have purchased without paying any attention to this matter, you want to sell those bonds, you can sell it, but you need to kind of phone your broker to sell those bonds. You can't do it online on your own. Whereas the bond that you get directly from Government of India, you can sell it with a click of button using your own computer. Now, the question 6 is, are there any charges that investor pays while buying or selling these bonds? Absolutely none. That's the beauty of sovereign gold bond. You pay absolutely no charge when you're buying it or charge when you're selling it. There are no making charges, there are no storage charges, there's no fund management charges. It's a it's the most efficient way of purchasing. How does investor receive interest? Is interest payable on the bonds purchased from secondary market or stock exchange? Is interest taxable? So there are three questions within this. Let's pick up first. How does investor receive interest? Very, very simple. It automatically comes in your bank account when the interest payment is due. You don't need to chase anyone. You don't need to fill any form. You don't need to follow up with anyone. It comes automatically in your bank account that is linked to your demat. Is interest payable on the bonds? Absolutely. Whether you purchase it directly from Government of India or from secondary market, on the date of interest payment, if you own those bonds, you will get that interest. Is interest taxable? Yes, interest is taxable like any other normal income. How is the price of these bonds determined? How is the redemption price determined? It's the same process for both purchase as well as redemption. As I said earlier, that Indian Bullion and Jewelers Association publish their gold rates every day. For the purpose of determining the price, 24 karat gold rate is taken for last 3 days average. So whatever is the average of last 3 days of 24 karat gold based on the rates published by IBJA, that's the rate that is used for both purchasing bonds as well as redeeming bonds. Can these be owned in paper form? Absolutely, these can be owned in paper form. Clearly, that's not most efficient because you don't get a discount 50 rupees. And when you sell it, you need to kind of then fill form, return that certificate, all those sort of steps are there as well. So, but yes, if you really fancy owning something, having a certificate, then yes, you can. How do I get the redemption value of these bonds? Similar to interest, automatically, no form need to be filled, no follow-up is required, nobody need to be chased. You simply, on the date of maturity, you get the redemption value directly credited in your bank account with no question asked. What are the tax implications of selling these bonds before maturity? Tax implications are straightforward. Then it becomes subject to capital gain tax. And the way it works is that if you've held these bonds for 3 years or more than 3 years, then yes, you need to pay long-term capital gain tax. Otherwise, it will be short-term capital gain tax. But it is similar to like what happens for gold ETF or physical physical gold. Hope these questions have been helpful in helping you understand the key feature, how the scheme works, how the kind of various components of the scheme are kind of happening in practice. Now, if you really kind of like that, you have the opportunity coming up because next week on 28th of December, Government of India is coming up with their next issue of sovereign gold bond. It will remain open from 20th December to 1st of January. So if you're interested in purchasing, if you're interested in investing in gold, sovereign gold bond will be available from Government of India from 28th December. You can use your demat account to purchase these bonds. So that's most important date for you to kind of keep in mind. I hope this whole information that I've shared with you in this video has been simple for you to understand and follow. As I said earlier, if you have any question, please do let us know through the comments and we'll get back to you and give you the answers for those. If you also have any suggestions on our video content or any topic that you would like us to kind of pick up for the future videos, then also through comments, let us know what those topics are. And if you've not subscribed our channel A to Z Learning as yet, then I would urge you to subscribe our channel, become part of our viewer community because our viewer community help us decide the topics that we cover in our videos. And viewer community is also kind of helping us fulfill the mission that we have set for ourselves, where we are going to be simplifying the world of saving, complex world of saving and investment, so that people, ordinary people, common people can easily understand and make wise, right decision for their savings and investment. Thank you so much for watching our video and good luck with your investment decisions.